Good morning, it's Jonathan Barrett with the morning debrief. It's Friday the 1st of July. That's the end of the financial year 2010-2011. And obviously things were quite positive yesterday. Local equity markets had a good rally. Also, equity markets around the world all looking very, very optimistic on the back of, well, is it the Greek concern out of the way of the debt? I can't really get all that excited about it when I know that debt to GDP ratio is at 150% and expected to grow to 170%. You know, the austerity measures, obviously, you know, the markets voted on. Everything looks quite positive, but really there's still issues there, and that to me is one of the core problems. I guess what we're seeing is an alleviation that contagion through Spain, Portugal and Ireland won't occur, and Italy. So as a result of that, people have seen a sigh of relief. The big issues are still out there, and so far nothing has been done. So I think we have to be looking very cautious at this rally to see whether or not it has got legs in it. Even as a result of what's happened in the last couple of days, commodity markets have also rallied. So I think we've really got to be cautious about these, what's happening, because, you know, I think perhaps again it remains relatively hollow in terms of that growth. But let's have a look at some of the markets, the way they traded last night, and take it from there. I guess the key here is equity markets, and we're seeing quite a movement there in equity and US dollar. Just a snapshot around the board. Dow, big strong move, up 1.25%, S&P solid 1% gain, Nasdaq 1.2% gain, Euro 1.6%, and you can see the numbers there, all in the black, all green, all go. Yeah, interesting, but you can't stand in front of moves like this, you've got to work with them. And as we tipped, you know, in our tweets and things, you know, some of these things being long, it's the right way to go. And the last couple of days have been quite good in trading. Just purely because we're running with this momentum. Local market also proved quite nice as well, up 19 points, 4,620. The 4450 is major support, as we know, and I think as a result of that, things remain relatively positive for the Aussie market at the time being. Let's just have a look at that local market. I guess when you look at the SPY, and it seems to, there we are, that's the run we've seen, and that is not unlike the Aussie dollar. That is not unlike crude, all these things. It just seems a powerful amount of money has moved towards the market, and as a result of that, we're seeing these quite aggressive moves, and there you have broken that trend. So is everything right? You know, here we have the divergence which we talked about, you know, and this is the move, quite a compulsive move to the top side. You know, and when you look at this, you actually get this sense that everything's all right, and that might last for a couple of days, but there are still those underlying concerns which are inherent in the market, which will remain an issue for some time. Looking at the Dow, there we are, another very strong rally. I'd expect, if there is concerns that we have, that this only confirms a range for us to trade from. I don't yet see the ability for the market to break to new highs, you know, back through that 14,000. And I once again have to reiterate the general feeling that we get, if that's the market and we're only trading just off historic highs up here, and as you can see there they are, 14,172, and we're even at 13,000. So when you look at that area of 1,000 points and the state of the economy, you really have to question that the Fed has done the right thing in keeping asset prices up, because we're all starting to slowly believe it. But anyway, let's see what happens. Equity prices at the moment do show very solid signs of support, even though some of the fundamentals we're reading aren't there. But I think as the market does range, we're just headed for that top end of the range. Onto the dollar, obviously you can sort of get a sense that the dollar is under pressure. There's no doubt about it. And that's just a feature of how we're all viewing the market, and as a result of that, commodities by default trade higher. It really is, there you are, then you can see it down to these levels, all good support down here, and as we've noticed a few times, it goes up, comes back, goes up, comes back, and I actually still think that volatility does force a low for us. A little Aussie there, 107.11. done very well, and you can see on the charts that it certainly does look. There we are, just loading now. You can see that it does look quite impressive for a move higher. Broken out of that consolidation pattern here, and I think the market will test this 107.75, and let's see whether it breaks it. Certainly the daily charts are very supportive of this move and potential to trade onwards and upwards. Okay, looking at some of the others now. If we look at some of the commodities, quite a volatile night for commodities across the board. Brent crude was down, West Texas was up. Let's have a quick look at the crude charts. They are down a little bit during our time, but as you can see, we've tested that trend line, which we're working on, and the fact that it didn't trade through that area, in my mind, suggests that perhaps that trend is here. But as you can see, prices are very stable around this area, and I think expectations are for it to continue to trade higher. Stops 92.70 if you're already long from the recommendations we had a little while ago. Okay, so that's the crude market there. Let's have a look at gold and silver. Very steady, and as you can see there, had a good move up to 10, but back, good support down here. I'd expect the market to spend some time going sideways. Gold-silver ratio, as you can see, still holding up quite nicely here. We are long. We're average, add to positions we've got in silver on a breakthrough 35.25. So I think that, to me, still remains pretty good. Looking at some of the other commodities, particularly the softs, a pretty negative move across the board. Particularly for wheat, wheat and corn down 30 and down 60, and soybeans were dragged lower as well, so quite negative across the board there. Copper was up 5.85, and we've already talked about silver. I think it is interesting to look at what's happening in the wheat market, because that's a limit move to the downside, and certainly very aggressive. When you look at that one-night move, it is a big issue, and I guess we're all trying to work out, whether it's just a front month that's causing it, or whether or not it's here to stay. We actually feel it's more to do just with the front month. People focused a little bit more on getting their crop basically off the ground, and I think if anything there, to me, it's under pressure, but certainly look very strong, and there's one bit of news that caused that. Okay, keep an eye on that and keep tweeting, because we'll find out more news about that as the day progresses. I think it was wheat was the one that caused it to trade lower. Okay, apart from that, I think let's look at the weekly economic calendar before we move on. And as we come into here, HIA, new home sales in Australia, University of Michigan confidence, construction spending, ISMN manufacturing, domestic vehicle sales, all in the States. If these all come up to be positive, then you might find that that'll only add to the view that, only add to the view that things are looking rosy, even though we know we've got some big problems. I just had an update on what's happening with the corn market and the wheat market. USDA report increase in acreage, and this sort of thing, you look at it, increase in acreage, well, why not when you've got so much out there? The question that we will focus on is the ability for this acreage to come to fruition. So let's see what happens on that front. Okay, well, that's pretty much about it from me for the morning debrief. Volatile markets to continue. Let's see how it all trades. But I think, if anything, probably expect the volatility and those trends to stay with us for a while. Just be careful and safe, because I think there's certainly a lot of moving and shaking out there in the markets. But that's it from me. Have a great day. We'll certainly talk to you later. Bye for now.